Today's session will look at the role of foreign direct investment and the role that it plays as a driver of economic growth, job creation, and technology transfer. So I'll give a brief intro, and then without further ado, we'll move on to our very distinguished panel, who I would like to thank all of you for being here. So over the last decade, Pakistan's FDI story has been pretty much China plus a handful of other countries. And it's been going mostly into power, infrastructure, telecoms, and financial services, with relatively little FDI going into export-oriented manufacturing or high-productivity services. Over the last year, while Pakistan's economy has shown signs of macro stability, net FDI is down 26% year on year in the first 4 months of financial year 25-26, with inflows dropping to $747 million US from just over 1 billion the same time last year. We're waiting for CPEC Part 2, but not much happening there. Even more concerning, most of what we record as FDI is retained earnings, not fresh capital. Pakistan's FDI as a percentage of GDP is about 0.6%. India is about 1.5%. Vietnam is about 4.5%. The government regularly announces multi-billion-dollar investment commitments, but the reality is stark. Very little has materialized, and the message is clear. Foreign investors are not convinced by MOUs, summits, or press releases. They look for execution, consistency, and the rule of law. And at the same time, we heard yesterday as well, domestic investors are increasingly frustrated and are increasingly demanding the same sort of protections that foreign investors seek, including international arbitration clauses, contractual guarantees, etc. So the picture is quite dire, and yet the opportunity remains significant and real. Pakistan currently has the following: geopolitical tailwinds, an emerging digital economy, the potential to become a regional logistics hub, substantial untapped capacity in sectors like agri-processing, renewables, IT services, etc. If Pakistan can restore investor confidence, and most importantly, as the PBC has always advocated, if we seek efficiency creating an export-oriented FDI as opposed to market-seeking FDI, then the upside is enormous. And what does this upside look like? Regional integration and transit trade will get a boost, export-oriented industrial growth, large-scale infrastructure investment, and technology transfer from global partners. This is the dream. So at this point, we're going to analyze where we are and how do we get to where we need to get to. I'll first turn to Samar. There has been in recent times a steady exit or downsizing of MNCs from Pakistan. And while companies may have their own reasons to exit, it does reflect badly on the host country's business environment, not to mention loss of tax revenues, job creation, etc. Samar, since you worked at PNG for over 20 years, and PNG is the most famous recent exit that we've seen out of Pakistan, I'd like to ask you, does the departure of multinationals reflect a corporate decision on their part, or is it an alarming indication of a crisis of confidence? And even if it is a corporate decision, why does Pakistan not feature in their corporate strategy?
Yeah, okay, thank you, and thank you, PBC, for the opportunity. So I'll start with an insight into some of the decision-making that I kind of lived through also myself. It was early 2010s. It was a very cold, wintry morning in Cincinnati, Ohio, the headquarters for Procter & Gamble, and we were making our way from our hotel across the road to the headquarters to make a presentation, a very compelling case for a diapers manufacturing facility in Pakistan. So I was running the Middle East, Africa, and Pakistan business, and the diapers potential in Pakistan. The diapers potential size, market size in Pakistan is massive. More babies in diapering age than entire Europe combined, etc., etc. So, typical classic compelling case. And as we were in that presentation, making that compelling case, a junior analyst from the corner of the room raised their hand, financial analyst, and said that, but have you guys factored in the recent change in the cost of capital cost of capital risk factor that we've put on Pakistan, which was 31%, by some consultant in New York who had looked at some recent bombing events and come up with a, super high risk category, and you have to now beat a 31% cost of capital to make the project viable. So the meeting was kind of over, right, at that point, because there's no way you're going to make that case work. A decade later, I mean, obviously I moved on to another role now, but a decade later, they eventually got into toll manufacturing in Pakistan. The Pampers brand market share in Pakistan was 80, today it's 8. Okay, so that doesn't mean that the market hasn't grown. The market size has grown. There are more babies in diapers. They're just in different companies' diapers. And so I just wanted to share as an insight. And then, of course, I was in the meeting rooms where decisions were taken to exit East Africa. Similar, dynamics were discussed. And I think that, when this famous new exit of PNGs from Pakistan, although the business was small, but it made a lot of optics. It made it look, it was bad optics. When that started doing the round, it was this discussion that I think emerged among many of us, which was, is it the country or is it the company? And I can pretty much safely say that it's definitely not only the country, right? And I personally, and I have a point of view on this, which is that I think they'll come to regret this decision because you cannot give up on a market like this, which has indeed lots of challenges, but so much to offer, and we know all the demographics, etc. I think the other, and I have two other quick points to make on this, which is, we had a lot of discussion yesterday on this as well. I think there's also a little bit of like this obsession with FDI, and maybe if you think about it, if you take the F out of the DI and look at just DI, we've got pretty serious challenges there as well, right? So just on DI alone, and we know, and many people in this room know that there are business groups in Pakistan with, you can safely, I think, throw a number out there with a couple of 100 billion rupees aggregated out there available to deploy, but that are not being deployed. So it's like what's happening with the DI before we get about the FDI. So there is that. Is a big question mark, and I think lots of course, reasons were discussed yesterday, very clear. And then occasionally in different coffee discussions and lunches, this question comes up that बाहर वाले क्या करेंगे जब अपना नहीं कर रहे invest, right? बाहर वाले पूछते हैं आपके तो अपने लोग नहीं invest करें, and so on and so forth. This conversation comes up. So I think sometimes it feels like FDI is a little bit of a red herring in Pakistan, because there is a lot more fundamental fix that we have talked about yesterday that needs to happen before I think that can flow back. Okay, so that's a really valid point, and we will look, of course, at the domestic investor too. Thank you so much for that, Samar. But before we do that, I'd like to draw Shazad in. And Shazad, as a banker, and now you're running a boutique investment bank. As you pitch the Pakistan investment story, how do you balance what we on the inside sometimes see as the doom and gloom, and what are international investors really looking at right now?
Thank you. Thank you, Saira, and thank you, PBC, for inviting me. It's an interesting question, but to be honest with you now, I'll give you some perspective just to set the stage. I've worked 35 years, of which I would say 32 years was with foreign entities, both outside, sitting at the head office and making these decisions or being part of these decisions. And then work with multiple multinational banks in some states, some left. And I can safely say that these decisions are not just binary. Pakistan mein rehna hai ki nahi, and as Samar was saying, we both have lived through this. So we sometimes overreact. So ek to ye overreaction hai chhod dena chahiye, just because there are lots of other things that go into that decision making. And sometimes it's purely personalities also, so don't underestimate it. And sometimes it's the person on the ground. Some of the multinationals, typically, and this was the joke among multinationals, that they used to have a foreigner sitting in those markets. And that foreigner's job was to show gloom and doom, because he or she, it was their next job that they were worried about. They come here for 2-3 years, their job is gloom and doom bataएं, get some incentives and get posted into a new thing. So sometimes that also, and that's why most multinationals now hire locals who have a good understanding and have a long-term view on it. I think Pakistan's story is definitely there, and I'll talk about what I think, few things that should be done and are being done, and what we should do later on. But I would just say, look, so I know everybody is going to talk about the negatives, but let me give you two very good examples of two deals that we've just, one closed and one in the midst of, which was Saudi Aramco. Saudi Aramco could have picked any country they wanted. They wanted to go downstream. And Pakistan 2 years ago was a lot different. A year and a half ago was a lot different than Pakistan today. We're on the verge of default and everything. And Saudi Aramco decided to come to Pakistan. They picked a local partner who we were advising, the other partners. And alhamdulillah, they've been very, very happy with that investment in Co-Petroleum. They bought a 40% stake. It was around, a significant dollar value. It's not disclosed, but it's significant. It's in 3 digits. And the point I'm trying to make is they're very happy in the last year and a half. Our job should be, how do we make them as a perfect example so that they can do more? Having said that, I'll give you a small anecdote. 2 दिन पहले या 3 दिन पहले उन पे केस कोई लोकल कोर्ट में स्टे ऑर्डर दे दिया कि वो अपना अरामको का ब्रांड क्यों इस्तेमाल कर रहे हैं. And somebody in the lower courts gave them a stay. These kinds of small things that they do, it will go away. It's not a big deal. But I'm saying Saudi Aramco is one of the largest companies in the world, one of the largest oil and gas companies in the world. And like I said, so they came and they're very happy. The other one was Ingredion. Ingredion owned Rafan since 1962. It's a beautiful asset that they have. They've been toying with the idea of selling, and their reasons are a lot different than just negativity on Pakistan. Initially, they wanted to sell the entire 70+% stake. The Nishad group bought it, and we were able to convince them to stay in for 20%. Percentage will go up and down a little bit because of some. But they're very happy, and why are they staying? They're staying because they've found a local partner who gave them confidence on what they want to achieve, and they want to make Pakistan a hub to get into the Middle East and African markets using this as a center of excellence. They weren't able to do it successfully because of some other issues, I won't get into it, and they have decided to stay. So I think while, yes, PNG is leaving, yes, there's several others who have left, but there's several who are coming in. So I think it's a balancing act. We need to make sure a lot of things we need to do for our local investor, and I'll give you my thoughts. I don't want to hog the mic, but I think right now, the decision, if you can put the right investor, and typically these guys want to come with a local investor. So we first should make sure that we partner them with the right local investor who has the same mindset, and it's all about doing the right thing. But let's also on FDI, it's not the quantum, it's the quality of FDI. And that again, I can revert back to that point, because it's FDI coming in protected industries and in trying to do the local market. I think that FDI is not sticky. You want FDI that's more export-oriented, import substitution, and that is something, those are the companies that will be here for the long haul, and they will do well.
Thank you, Shazad. So you spoke about the importance of the local investor and attracting the right sort of FDI. And I would now like to move on to Fawad. And, we spoke about some, when we were talking, we spoke about some of the success stories, and there are many. So, but what I really want to focus on here is that as, a big domestic investor yourself, you're now at the forefront of the Saudi Park dialogue. And you mentioned that the dynamic seems to have shifted once the business communities on both sides really got involved and the local banks on both sides got involved. And that's really when the momentum started building up. So my question to you is that as a domestic investor, what should domestic investors do to lead this charge? And specifically, what are you doing? Do you see yourself making more investments in this space to show the path ahead to potential Saudi partners?
Thank you very much, and Assalamualaikum everyone. Our group has been in business for last 96 years, and personally I've been in business for last 40 years. The foremost thing that when we go around the world, is the confidence in ourselves, and the ability to market ourselves the way we actually are. rather than always saying that this is wrong, it won't fly. We have great success stories in Pakistan. One, Atif Bajwa Sahib is sitting here. So when they took over this Bank Al-Falah for $40 million, what's the worth today? $600 million. Al-Mizan invested 18 billion rupees, $200 million at that time. Today it is $3 billion. UBL, Dada Sahib has been its CEO. $200 million, $3.3 billion today. So these are the positives of Pakistan. You just mentioned about Aramco. Why don't we talk about Rico Dick and Barrick investing $7 billion in this country, in this environment, in an area which we term and say that it's the worst territory from terrorism and other aspects. So what's common in all? That Pakistan has opportunity. You just need to have confidence and present the best that you have, rather than always saying that this is wrong and this is wrong, and this won't get to where we want to be. So we are a country of 250 million people. That's a huge market in itself. That's a huge plus that we have with 60% of the population below 30 years of age. So these are all our positives. We have a largest freelance IT community in the world. So what we need to really do is, Jehanzeb Sahib is the SIFC. This is the first time, now I'll come to the specifics. This is the first time that the government, SIFC, mandated the private sector of Pakistan that you engage with the Saudis and get them to Pakistan. Trust me, the mindset has changed. On Saudi side, they call us now that, brother, give us the projects and we want to come to Pakistan. Yusuf Saab is part of that council. So ask him the interest that they have in coming to Pakistan. So it is not just, so what now we need to do is that they are ready. So we are in a region with $3 trillion of GCC funds all around us waiting to be deployed. If they can deploy, just Saudis have committed $30 billion to Uzbekistan in various projects like renewables, infrastructure, agriculture. So it's a landlocked country. So is Kazakhstan, so is Turkmenistan. So if Qataris, Saudis, Abu Dhabi, UAE, all these sovereign funds are investing in these landlocked countries, Pakistan has much more to offer in terms of our geopolitical dynamics, our geographical location, and specifically after this May event with India, the world is just realizing the new face of Pakistan, the strength that it has, the armed forces and the strong people that we are, resilient people we are. So we just need to see what Uzbekistan and these countries, these C5 have done and what we can do. And if we sit with SIFC, the government, and emulate some of these policies that they have offered to these Middle Eastern investors, trust me, they will invest much more than what they have committed or are investing in these smaller countries, much smaller than us. We have much more to offer in terms of every area that they are interested in. So we have to change our mindset. That is where we can start to attract not only our domestic investors, but also the foreign investors. Now, coming to the domestic, what Samar just mentioned. Domestically, it's not that people are not investing. We as a consortium with Lucky and with Liberty are investing in Balochistan. We have another consortium. We are investing in mining with Lake City and Surti and Hilton Pharma Group. So these are risky projects, but as local investors, we are investing in those. Similarly, in Pakistan, a new concept has been adopted, and this is something new, that consortiums from leading groups of Karachi and Punjab have got together and doing multi-billion-dollar projects in real estate, in agriculture, and we can do much more. We can participate in the privatization of these SOEs. So, if you ask me, one simple solution for all this is we should all get positive, and we should all try to find a good working relationship based on trust with the government, so that we as a team can do this. If we have worked this as a team to bring in Saudis, it was a team effort. I can't say that the private sector did it. It's SIFC and the private sector as a team which are pitching, and inshallah we'll be successful. Thank you.
Thank you. So the importance of a positive mindset, and you're right, there are silver linings, as it were, green shoots that we can see. And we'll come back to this idea in terms of what else do we have to be optimistic about at this point. There are certainly investors that we have also seen showing tangible interest, not just in principle. But moving on now to Dr. Jehanzeb, and I know aapka time bhi is limited, but the role of the SIFC, we'd just like to ask you about, if you can speak to the fact that the SIFC came in with some very bold objectives, and, some of the figures, 5 billion of FDI target in the near term, up to 100 billion US dollars for over a few years to put Pakistan on track to being a $1 trillion economy, etc. And yet we see decline in year-on-year FDI, and at the current run rate, we will probably continue at the 2 billion, 2.5 billion USD mark. So the question is, while the SIFC has certainly streamlined some approvals and helped with a few marquee deals, we do seem to be way off track. So why is the SIFC short of the target that it set itself, and what lessons have been learned, and what is it aiming to do differently or better?
Well, thank you very much. So the numbers that you quote, and these are you quote as targets, these are numbers which were thrown up by investors like Fawad was mentioning. Various countries were mentioning that they have this capacity or intent to invest in Pakistan. Somebody said 20 billion, somebody said 30 billion. So they are not in the air. These were figures mentioned by, particularly in the Gulf. And the SIFC also came in response to facilitate this kind of work. And some of that would have been possible. But we didn't go down that route because that was market seeking and outflows were greater than inflows. Something that you had mentioned in the beginning, the quality of FDI is very important. And if we had gone down the route of just tapping that FDI so that the monies were coming in, we were not, our numbers showed and the computation showed that for the moment we have to be careful in what kind of FDI do we bring in. So it was to revert back to the market seeking, not to the market seeking, but to the efficiency seeking. And FDI which would lead to more manufacturing, more exports, and that's where the private sector is. So some of those projects that were being looked at and the investors were interested, and we also tried to present those projects, were projects of public infrastructure. And we already know that we are unable to service the liabilities of our existing public sector projects in the road sectors, in ports, etc., where we have obligations, contingent liabilities in the power sector, and therefore we have to be very careful with the quality of it. So that's one. Those numbers were surely mentioned, but they were we had to look more granular into it. And as was mentioned, that particularly from the Saudi side, now the shift is toward the private sector. And that's a very welcome shift because that's where we would like to encourage the investments. The second aspect is about what brings in investment. It's not in isolation. Of course, SIFC came in response to economic conditions in the May of 2022 when we had a very difficult situation. But investment is not standalone. And the SIFC has been involved in bringing about the stabilization and the policy continuity since then. We've been backstopping the fund program so as to bring in the macroeconomic environment in which investments can take place. And that's been a lot of work that has gone there. It's done a lot of work in terms of bringing together the stakeholders, the federal ministries, the independent organizations, autonomous bodies, the provinces, and that's been a weak area. We have not been able to mobilize the institutions which bring all the government entities together for synergistic actions. And I think the SIFC has been able to provide a platform for that purpose. Now, I look at investments in three buckets. People talk about investment facilitation, and that's why SIFC also tried to do a lot of hard work. But investment facilitation is not possible without a good investment climate. And so we had work to do on the investment climate. And that was more serious and more medium-term work, which was part of the larger economic work. And I think some very significant achievements have been made. And now the challenge is how do we move forward to more sustainable growth, where investments come in, they create more livelihoods, there's more equity in the society, and it also brings in more exports from the country. So this growth is not going to be only for the purpose of bringing in investments. We are committed to the Sustainable Development Goals, and these goals in 2030 should be able to make a change in the life of the people. So if you look at the entire spectrum, I think work has been done on investment climate, some work also on investment facilitation. I think work has to be done on investment promotion. But the key is to have policy continuity. We've been oscillating between import substitution, protectionism, export-led. These have all become banners. There has to be a very serious effort to have a transition, which is not going to happen in 2 to 3 years, but over a 5 to 10 years period, where we move from a protected economy to a globally integrated economy. And investment would be a subset of that. It would not only foreign but domestic investments will all come in. So where is the SIFC in all of this now? Our mandate is primarily investments, but it expands into other areas where we can improve the investment climate. So some of the policy frameworks were not there. And when we were speaking to our potential investors in the Gulf, they mentioned some of these issues. They're still worried about what is the macroeconomic medium-term policy. How would we manage our exchange rate? Does a stable exchange rate imply that there would be a slide at some point? Because investors have to work out their risks and look at what needs to be done to mitigate those risks. So they're looking at us. They know we've achieved some success, but they want to see more evidence of our seriousness towards these reforms. And some of the reforms are still to be done. So I would conclude by saying that the numbers that you talk about, I don't think these numbers are really important. What is important is to see that the country should be on a sustainable economic and development course. And that would imply policy continuity. We talk about political continuity, but we don't talk about administrative continuity. In countries where there is political upheavals, it's the civil service which continues with policy and make sure that the environment is transparent and the investors are assured that their investments are safe. So SIFC is doing this work and we do a lot of work behind the scenes. We deliberately don't make a lot of noise about it, but be assured that we are on the track and we are on the task. Thank you.
Thank you, Dr. Jehanzeb. I'll just press you a little bit more, if I may, because I know your time is limited and you may have to leave early. You mentioned that facilitation is not really possible without a positive climate, economic investment climate. And you mentioned policy framework. So Pakistan now has an investment policy. It has a revamped industrial policy as well. And SIFC is the execution platform between the two. So my question is that Pakistan has finally built the architecture, but the real challenge, as always, is disciplined implementation. So you mentioned there's a lot of work behind the scenes, but what can we look forward to as tangible outcomes? What is the result of all that action behind the scenes?
Well, thank you again for this very important point. I think one of the lessons for us in the last some decades has been policy failures. And we have not learned from our policy failures because we do not have an inclination to look at policies, monitor policies, and evaluate them objectively. You mentioned the investment policy. We've been having investment policies since quite some time. But our policies don't speak to each other. The investment policy doesn't speak to the tax policy. And by the way, we don't have a written tax policy. The fiscal policy does not always align with the monetary policy, and so on and so forth, with the industrial policy, with the agriculture policy. The energy policy is at variance with some of these policies. So there have been policy disjointness. And I think that's been a major challenge for us. We are bringing together all the stakeholders to bring this policy cohesion and coherence, and over a period of time, reforms, we know what needs to be done. But how would it be done? The sequence of reform, how do you calibrate these reforms so that you minimize the pain of the losers and you create new opportunities for the winners? To do this in a very short span of time would create a great deal of upheaval. So this policy environment has to be improved. And I think some of those bits and pieces are in place. They need to be put together. There has a lot of interconnectedness. We continue to do this work. And on the implementation side, we have to re-empower our institutions. Today's economy is handled by institutions which are free of day-to-day interference. You have the Security and Exchange Commission, you have the regulators, you have NEPRA, you have AGRA, the State Bank of Pakistan, the Federal Board of Revenue. All these institutions have to be made autonomous, empowered, and the investors must have confidence in this, that these are not swayed by political needs in the short to medium term. That work is required. Some of it is done, but much more needs to be done. Thank you.
Thank you very much. And that's a good segue to Azfar. I will now draw you into the conversation. And you've obviously seen this picture from the Board of Investment angle, both in terms of domestic investors and international investors. You've spoken in the past of Pakistan not having a country strategy to improve investor confidence. You've said that things are managed on an ad hoc basis. And you've also said that the PBC should portray the right picture. So the question really is, what is the right picture and what should the roadmap be?
Thank you, Saira. Bismillahirrahmanirrahim. First of all, I'm grateful to PBC for inviting me here. And this is an annual feature I'm attending since long. This is my third time as a speaker. The last year, whatever I talked, the situation is almost similar. So there are two ways for sharing the views. One is the status quo, and the second one is to highlight the facts and the factual state of investment. I'm in complete agreement with Fawad sir that we should be optimistic and we should be positive. My second view is that SIFC is a brilliant concept. When I was part of the government and I headed Board of Investment, I worked very closely with the military leadership. and with the engagement of the private sector as well as the bureaucracy. Because without the collaboration of these four stakeholders, the fixing the investment landscape of the business climate is very difficult. But before moving on, we should understand that what are the root causes where we are standing, and we should talk about the balance sheet in black and white. Without seeing the picture in black and white, this is difficult to fix your landscape. In last 38 years, if you are talking about 98 to 1999, we attracted $6.5 billion as the net FDI. From 1999 till today, we attracted around 52 or 53 billion dollars as the net FDI. I'm talking about the net FDI after all the outflows. And this is the State Bank of Pakistan number. Dr. Ishrat is here. From 1999 to 2008, we attracted around $18.9 billion during the General Musharraf era. From 2008 to 2013, we attracted $9.8 billion during the PPP tenure. From 13 to 18, during the PMLN tenure, we attracted $10.3 billion. Then Imran Khan's government of 3.5 years, and we attracted $7.7 billion. During the PDM1 of Shehbaz Sharif Saab, we attracted $1.55 billion. Then we experienced the 5 months caretaker government of Senator Kakar, where we attracted around $863 million. And in the last 1 year and 2 or 3 months of this PDM2 of Shehbaz Sharif Saab, we attracted around $2.3 or $2.4 billion as the net FDI. So only one thing is consistent in Pakistan, and this is your net FDI number. This is almost $2 billion per annum. There were 2 years, Waisa Saab, when you were also the Minister of IT and Telecom. 2006, when we attracted $5.3 billion as the net FDI, and 2007, when we attracted $5.4 billion. And later in 2017-18, we attracted $2.9 billion. So this is the comparison, the status of our FDI. If we are doing the comparison with the regional countries, for example, India attracted $49.47 billion. Indonesia attracted $47 billion. Vietnam attracted $36.67 billion. China attracted $33 billion. UAE attracted $30.1 billion. Qatar attracted $29.1 billion. And countries like Turkey and Malaysia attracted around $10 to $12 billion. The Central Asian countries like Azerbaijan attracted $8 billion. Last year, Kazakhstan attracted around $18 billion. Uzbekistan net FDI inflow is around $10, $11 billion. Despite the political turmoil, the Bangladesh attracted $4 billion last year. The 9 African countries' performance was better than us last year. Egypt was $9.4 billion. South Africa was $5 billion. Ethiopia was $4 billion. And countries like Mozambique, Namibia, Nairobi, Congo, they perform better than us. So we should evaluate where we are standing. I understand that our population size is 250 billion. By 2047, we will cross 400 billion. We are world's 5th largest nation with a population of 60% plus under 30 years of age. So this is a classic opportunity. Pakistan is an epicenter of around 5 billion people in our surrounding regions. But as far as the FDI is concerned, our performance is same since last 25, 30 years. So this is the factual status. So where is the problem? The problem is that we are not ready for the real course correction. I personally believe, and this is not a political statement, that Pakistan of Imran Khan is different. The Pakistan of Sharifs is different. The Pakistan of PPP is different. And the Pakistan of military is entirely different. But you can't manage a country of 250 million with 4 different types of Pakistan. You appointed 19 chairmen of FBR in the last 15 years. Rashid Langriyal Saab is the 19th FBR chairman. Only 6 chairmen of FBR performed 1 year plus as the chairman FBR. You appointed around 18 or 19 federal finance secretary in last 15 years. I'm talking about 2010 onwards. You appointed 23 finance secretary BOI in last 15 years. Only 2 secretaries, Iftikhar Babar and Farina Mazhar, she is sitting here, they performed over 2 years. And then same is the case of privatization commission and all the economic ministries. So this is a classic example of ad hocism and firefighting. The intent is positive, the intent is good. I'm talking about the bureaucracy, I'm talking about the institutions, I'm talking about the military and the political parties. But the missing element is seeing the picture in black and white and a long-term strategy.
So the long-term strategy is still missing, basically.
The long-term strategy is still missing. So the policy continuation is important as well as the continuation of good professionals. Khalid Mansoor Sahib is here. My question is, where is CPEC authority? He was performing very well. We are missing the talent like Khalid Mansoor in this country.
Yeah.
Where is CPEC authority? Closed, doors closed. So my point is that there is a need of collaboration, there is a need of course correction for next 20, 25 years.
Correct.
Instead of next 1 or 2 years. There is a need of complete plan for next 10 years. We demonstrated in the nuclear. We started in the 70s, executed in 1998, until today, all political parties, military leadership, all stakeholders are on the same page. And this is the classic example, number 1. Number 2, we are talking about Saudi Arabia. This is my subject also. I'm a student of Saudi Arabia. As far as the economy and business is concerned, Riyadh is the most happening place today in the world. And Fawad bhai rightly mentioned that they invested around $30 billion. Actually, they invested $21 billion. And recently, they signed the contracts of $9 billion. So, investment minister told me that, brother, and this was around 2 years ago, that we invested $21 billion in a country like Uzbekistan with a population of 35 billion. Why will not invest in Pakistan? So my forecast is that, and by the way, this is not the new scenario that Saudis are interested. I'm speaking since last 5 years that Saudis are not interested, but beyond interested to invest in Pakistan. The situation is similar. But we attracted only $550 or $600 million in last 60 or 15 years.
Yeah.
So the course correction is important, the collaboration is important. And one last point as the opening remark, that as I mentioned that I am a big advocate of SIFC, but there are 6 institutions working for one objective in 6 different directions. One is Board of Investment, was SIFC, and 4 provincial boards. There is a need to collaborate and merge all these institutions in one platform. So this is my last comment. There are other issues I will answer later.
Thank you, Azfar. So, desperate need for course correction, but of course we all see the potential, and we must mention that, even in yesterday's sessions, we spoke about some of the investments that are coming in. There's interest from Google, Abu Dhabi Ports, BYD. We talk about there's a minerals complex in Punjab, etc. So let's keep the good news as well in sight. And I think the most important thing right now is that the vision seems to be there and the will is there. How do we actually now take it to the next level and see actual results? And I would like, before we open it up to the audience, I would just like to ask each of the panelists to share one last sort of thought in terms of the future.
Yeah, I was just going to say a quick point. I think we have to close soon. Is I think a lot of great discussions. One actionable item I think we can hopefully do a deep think on, which is, because we talked in the early part about companies leaving, etc. And I really believe, at least by the way, firmly believe that in the consumer space, any company that has left Pakistan, any multinational company that has left Pakistan will live to regret that decision. I'm very sure of that because of, we are in that space and I see what's happening. Now, but however, So that might be their loss in the long term. But our loss is going to be capability building that we will definitely have to suffer from. So for example, one of the great things these companies have done, banks have done, global banks has developed amazing talent in Pakistan by investing. And these companies do that regardless of race, religion, creed. They do a great job in investing in their people. And we have a great generation of bankers, many of them are here, that we all interact with, and they are absolutely outstanding talent that has probably grown, majority of them through the large multinational banks, and now are doing great. But the fear would be, is this the last great generation of bankers, right? And similarly, brand managers and et cetera, because you need that capability training. So I think one actionable item for PBC to consider, I think the board to consider, would be, do we need a very aggressive capability injection program where we can bring together Pakistan Training Society, I think, does work. There are different societies in different industries that are doing capability work. Can we somehow bring it together under PBC and do like a 5-year program on how are we going to do an equivalent to capability building that these multinationals were doing, so that we don't lose the talent quality over the years to come? I think that's one thought to consider for people. That's what I was going to say.
Building up on that, Shazad, also, how do we integrate Pakistan into the global value chains? Because that is the whole objective of effective FDI.
Just one, and Jehanzeb mentioned this. Again, go back. FDI is not the only answer. It's the quality. The amount is not the only answer. Yeah. It's the quality of FDI. And I think that's something we are forgetting, because we are bringing in FDI in sectors that are protected, that are not necessarily going to give sticky enough for the future. And that's what you saw. When these come in, they leave as fast also. So what we call in our lingo, it's the hot money, right? You don't want that hot money. You want money that comes in. And it's also the absolute amount. I'll give you an example. India is 70 to 80 billion. We are 2.5 billion, you said, 2 billion over the years. So it's the absolute, it's the percentage of GDP. That number for India is around 30, it's actually 31%. For Pakistan, it's around 13%. For the world average, it's 22%. Vietnam and Thailand are 31 and 22%. So it's the percentage of capital formation that's going on. And again, one point is that FDI is not the engine. It's not the only engine, but it's the engine that pulls the rest of the other investment criteria, which is, again, confidence. It gives it a lot of, it's a signal that gives to the market. It's a good signal to have. So it's not the only thing, it's not all gloom and doom, as I said in my opening remark. And as a banker, I can't help it, but I like to leave with some thoughts. I have 5 suggestions, and I think some are already in action, and I call the secret sauce. One is lock in the policy stability. Jehanzeb talked about it. SIFC is doing a great job yesterday. Ori talked about it. I think we need to get that. And again, that there's nothing wrong in plagiarizing when something is going well. Look at what Vietnam did with Samsung and Apple. Look at what Bangladesh is doing in the RMG cluster. And I think we should try to emulate from them long-term policies that are there. So that's the first thing, stability. The other thing is anchor investor. We have talked about Saudi and the GCC countries. I gave you the Aramco example. I think Vietnam is a great example of what they did with Korea and what Thailand did with Japan. These are countries that have flourished. I was in Thailand a few weeks ago. I've been to Vietnam also, and I think, look at the number of exports they're doing. And it's, again, we have to see what they've done. Samsung right now is producing 60% of their phones out of Vietnam. Why have they done it? They've given policy stability and all that. So again, let's bring in, so using that same example of what Japan, Korea, or China have done in other markets, and I know we were trying to do with China, but again, the Saudi is a great example. We have talked about it. I think we really, and again with Fawad Bhai and others on it, and some leading companies already here. I think let's build up these supplier parks, SEZ zones, give them certainty around policy stability, and fast track their approvals, and not just VIP them. Let the big boys and girls come, and then the second tier will come. And I've seen this in other markets. I've operated in multiple markets in my 30-year experience. So please, let's not lose this opportunity. So the second one is the anchor. Third is, of the source, it's the anchor. The third is the underlying operating conditions, not just incentives. Let's create those underlying things. Vietnam and Bangladesh, again, have done the same thing. Biggest tax holidays, but it's not tax holidays just to give protection. They won by offering reliable power from and ports and everything else. The third thing is on the source is the stickiness. And this again, I've repeated it a few times. We need to give export that is sticky. And that is again, with other countries that have done it, it's all where we are not just giving domestic market players. We are trying to bring in people who use this. And again, let's not forget the talent that we have. Samar mentioned the bankers. There are many other talent pools that we have. Technology is one. And I think we really, really need to nurture that stickiness and reverse engineer that. And that's what's attracting it. And last thing on my thing is the investor experience. And here I bring in the local investor. Your biggest thing anybody does, आप कहीं भी जाते हैं आप पहले पूछते हैं कि locals क्या कर रहे हैं, उनका क्या confidence level है, वो क्या कर रहे हैं. आप रिश्ता भी डालते हैं तो आसपास में पूछते हैं, पड़ोसियों का पूछते हैं. So let's make that underlying experience.
Shazad, if I may just, because we're short on time, but
Yeah.
thank
So
you very
that's
much. I think your last point, local investor, and if I may just ask the rest of the panelists very, very briefly, if you could in a minute each, because I do want to take in at least a couple of questions. So Fawad, if you may just give a summary.
One-liner.
Ji.
The private sector of Pakistan has to rise and team up with the government to ensure that we develop a model where not only we invest, but we can bring in the foreign investment.
Yeah.
That is the only way for Pakistan to grow.
Thank you. Dr. Jehanzeb.
Thank you again. So I would say there are three very important debates which are not sufficiently...
Just a quick summary.
Yeah, but I'll just mention the debates. I won't talk about it. The first is the role of the government. People keep saying about the cliche that it's not to do business, but much more than business, the government has to roll back a great deal. Not only in business, but in a lot of other things that the government is doing. And I think that's not being sufficiently debated. We have to define public good very narrowly. We don't have capacities, we don't have resources. So very narrow definition of public good, leave all the rest to not-for-profit and to for-profit. The third is, how do you have the federation working on this? The provinces and the federal government together. We are trying to manage an economy just through the federal government, which is not possible anymore. The subnationals are very important players, and therefore bringing together everybody. And finally, to have the institutions which run the economy. I mean, we have people, Dr. Shamshad is here, if I could have her attention. She's been the finance minister, but to my mind, finance has nothing to do with the economy. Under the rules of business of Pakistan, please, I want to provoke you into that.
We'll just open it up to...
Under the rules of business of Pakistan, the word economy is not mentioned under the task of finance ministry. It is all under the planning
Thank
commission.
you, Dr. Jehanzeb.
Thank you.
Azfar, if you could just summarize in 30 seconds.
Actually, our 90% focus should be on our existing investors. This is what my narrative is since last few years. FDI is actually a barometer for evaluating your investment climate. If you are evaluating the top FDI countries in the world, the data is showing that all these countries allowed their existing investors to create wealth, to protect them legally and through policy continuation. So our 90% focus should be on local investors, and already the foreign investor invested in Pakistan.
Excellent.
Without satisfying the existing investors in the next 3 to 5 years, we can't attract sustainable FDI.
Thank you.